Hello friends, this coming week the first stock I would pay attention to is Microsoft. It's a very nice upgoing trend and it has a nice platform since July 23rd, and then it just break out with relatively large volume, and I'm expecting this stock will keep pushing new highs in the coming week because it's one of the heaviest indexed stocks. So if the rest of, as long as the SPY won't fuck up, this my stock will definitely keep pushing up higher. You can also look at its weekly charts. You can see for the past few weeks, I see more more green bars than red bars, and the volume is very steady. And the next stock I would focus on is Apple. Apple is similar like Microsoft. It's also a upper trend. It's almost gonna break out from its current platform. You can see its weekly charts. It's also forming nicely with the green bar accumulation. I would definitely buy the $150 cost for August 20. I would also buy the October cost as well to roll over for its coming up earnings report. Next one is Applied Materials. It is reporting on August 19th. And you can see it's been consolidating since April in this trading zone, with ceiling at 145 and bottom either 129 and 120. With the chip shortage and the data center trend keep pulling, I would say Applied Material could be a long-term holding for the next few quarters as well. And if we look at its Friday's chart here, it has a nice pulling at the end of the trading hour. So I believe it's safe to buy a 135 cost before the earnings report. If you want to hedge it, you can do a 120 put. That's out of the money for September 17th. Because August 20th is also going to be a busy option day. So I don't want to gamble on the short term. But most likely, if Applied Material cannot break out 145, it's probably going to be rejected and then retest 130 again. So if you buy 120 puts in September, you still get a high chance of closing the put with profits. Okay. Next one is 3M. From its monthly chart, you can see it has been consolidating at the $200 level for 4 months already. With U.S. infrastructure progress, funds probably rotate into industrial and material stocks. And in this sector, 3M seems to be a good candidate. As a personal protection equipment leader, with COVID patients number keeps rising, 3M's business is promising for the next few quarters. On its monthly chart, we can see there's a gap around 215, 220, 225. I actually would definitely buy maybe January 230 calls or even 250 calls, because we know this trend of buying PPE will keep on in the foreseeable future. And if it's going to reverse the trend, we definitely see a support here at 180. So the win-lose ratio is like 2-to-1, not a bad trade. Okay. Next one is Planeteer. After its earnings, we can see a jump with volume. Now it's hitting its previous gap. The first target is 26.8 and the second target is $30. So on Monday, I would like you to break out with a large volume, at least 1 million for the first 5 minutes of the trading hour. Otherwise, they may be still consolidating, form a flag here. And if the flag fails, and then it may come back to 21, 20, or even at the end of 18.6. Okay. The win-lose ratio is likely 1-to-1. It's not that promising, but for the long term, I think it's worth buying. And if you think you're comfortable with like $500 lose if you buy 100 share, I think that's reasonable risk levels. Okay. Next one is Nvidia. It's reporting on the 18th. Look like it's consolidating as compared to AMD. They both are good players in the data center, but the chip shortage or maybe the raw material shortage may affect its supply chain. So this quarter may be cautious. I'm patiently waiting for it to return to 180 and then gradually add. But eventually, you know, this is stock is holding for long term. It may hit 22, 250. I would definitely buy 250 calls for October or November for its next earnings. Okay. Other players who's going to report is a Walmart. It's it's a important indicator for retail sectors. We can see on its weekly chart, it's hitting 150 ceilings. We'll just patiently observing if it's going to break out before the earnings, and after earnings would come back to 130 level. I probably wouldn't trade this one next week, but I will be observing and then jump in maybe next week, depending on which direction it goes. Okay. And let's look at the daily volume here. Normally it's like 5 million, and I think it's heavily manipulated for certain reasons. So I'm not happy camper for Walmart. Okay. Also reporting in the retail sector is Home Depot. It's also currently retesting its new highs, and looks like there is a support here at 285. So we'll see if it can break out, and then the target might be 360. But the win-lose ratio is not that great, so I probably won't trade this one either, but I will keep close eye on it. Okay. The last one I would like to talk about is Zoom. Zoom's weekly chart is not good. You see the red candle engulfing the green bars, and I probably will look it down to 330, 300 level, and just patiently play this one before its earnings, okay? But I think it's a lot of players on the sideline right now, and it will be an interesting play for the next few days. We remain target to be 450 after earnings, okay? So if you buy around 300, the win-lose ratio is like 2-1. And this pretty much wrap up our session today. Happy trading. Good luck.